I think basically physical demand for silver is overwhelming the paper market. And 3.5 years ago, or a little more, we had the silver squeeze movement, and that didn't really go anywhere. We got to 30, and then there was a lid there, mainly because the big sovereign buyers of physical silver that we're seeing now, and also big investors, they weren't interested in silver. They might have been buying ETFs, but they weren't interested in physical. But now everything's changed. And I think that's why silver is picking up. And also silver has still to catch up with gold, because don't forget, gold in 1980 got to just below 900. And now we are here at, I think, 4,200 as we speak. And silver got to like around 50 in 1980, and it's just moving above 50 now. So I think, since mid-October, there's been a correction, and a lot of people weren't too sure if silver was going to make it back up. But I think this is very significant that we made it back up, and we've made a new high. Yeah, gold is lagging, but I'm not concerned about that. I think if you look at the gold-silver ratio, it's breaking down, which is a good thing. Back in the 70s and also in 2011, towards the end of the bull market, silver really caught up and went higher. And I'm not saying the bull market is near an end. Precious metals, I think, is far from over. But usually it's good to see silver leading the way. For me, the most important aspect is that actually central banks, like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos, so almost 2 tons. They're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So yeah, up until 6 months ago, the reason people gave for silver underperforming gold was that, banks only buy gold, they never buy silver. But that's completely changing, and I think that's huge. And I think the silver price, right now we are like in what one would call terra incognita. Like we're in territory we don't know. It's never been there before. But I think there's such huge potential for silver now that central banks are getting involved. And unfortunately in the West, very few people are aware of this stuff. I mean, you and I are aware because we listen to you listen to me, I listen to other people in the gold and silver space, but the mainstream is like completely like not really aware of it yet. Maybe the fact that like Tucker Carlson has started his own precious metals dealer might help wake people up a little bit. He's got a big following. So yeah, that's the major thing. These countries outside the West, they're going back to silver. Even Korea, South Korea, the central bank there has started buying gold again, but also silver. And we also seen, Elijah, that the United States and China, they've put silver on their critical minerals list. So everyone wants to get silver before those two giants get a lot more. Back in from 05 to 08, even though I was a futures and options broker for government bonds, we had a client that traded a lot of silver, and so I was involved in that. And I could remember $5 days when silver was between $15 and $20. So I don't see why we shouldn't see $5 days again, especially now that we are above 50. And I mean, as we speak here, we're just trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60, which is half of, I guess, $5. But yeah, $100, I don't think it's out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double. And if we double, we're at 100.
Whenever I look at what's unfolding in the silver market today, I can't help but smile a little bit, because so much of what people claimed would never happen is now happening in front of our eyes. For years, silver was treated like a forgotten cousin at the monetary family reunion. Gold was the elegant, respected guest of honor, and silver was the energetic troublemaker no one wanted to give too much attention to. And yet here we are, watching silver behaving with far more strength, far more conviction, and far more global demand than almost anyone expected. The very things people dismissed for decades, the monetary nature of silver, the role of silver outside the West, the appetite of sovereign players, are now becoming the dominant forces in the market. One of the most important points I've been emphasizing lately is that the physical silver market is overwhelming the paper market. And I don't mean that in a dramatic, conspiratorial way. I mean it in a very calm, measured, structural way. The paper market depends on confidence, leverage, and liquidity. The physical market depends on supply, demand, and delivery. And right now, physical demand is simply overpowering the structure of the paper system. We saw the first hint of this more than 3 years ago during the silver squeeze movement in early 2021. That attempt didn't fully break through at the time, of course. We shot up to $30 and then hit a lid. But what mattered was not the move to $30. It was the fact that millions of people suddenly realized the physical silver market was far tighter and more fragile than they'd been told. Back then, the big sovereign buyers weren't in the market yet. The big institutional players weren't taking delivery. It was mostly retail investors trying to test the system. And even that was enough to cause shockwaves. Now fast forward to today, and suddenly you have the Middle East, Turkey, Russia, China, and even South Korea accumulating physical silver. You have India allowing silver to be used as collateral for loans, a completely new policy shift. You have Dubai literally showing off a silver bar weighing almost 2 tons, like it's a trophy. And you have tokenized silver platforms popping up across the Gulf region, aiming to make silver spendable again. That's not something you see in markets that are insignificant. That's something you see in markets that are being remonetized. For years, people said central banks only buy gold. That was the cliche. That was the excuse analysts gave for why silver underperformed. Central banks buy gold, not silver, they'd say. Well, that excuse is gone. That world no longer exists. The monetary winds are shifting. Something as simple as South Korea quietly adding silver to its reserves might not seem important, but in the long arc of monetary history, these are the breadcrumbs that lead to bigger structural shifts. And I find it fascinating that most Western investors still have no idea any of this is happening. Because here in the West, people are too busy watching the daily tick-by-tick charts, worrying about whether silver is down 20 cents or up 40 cents. Meanwhile, in other parts of the world, entire monetary systems are preparing for a future where silver plays a real role again. The West is still living mentally inside the 1980s or 1990s. The rest of the world is moving into the 2030s. But you know, this disconnect is normal. Precious metals bull markets don't start with fanfare. They start with confusion, disbelief, frustration, and silence. The early part of the move always feels like it shouldn't be happening. Like the market is marching to the beat of a drum nobody else can hear. And silver, being the more volatile of the two metals, tends to confuse people the most. It pauses, it consolidates, it shakes out weak hands, it rises suddenly, it falls sharply, and just when everyone thinks it's finished, that's when it wakes up. The most significant thing for me is the gold-silver ratio. When the ratio is falling, meaning silver is outperforming gold. That's usually the sign of deeper systemic stress. That's what we saw in the late 1970s. That's what we saw in 2010 and 2011. And that's what we're beginning to see now. A falling gold-silver ratio tells you the monetary system is shifting. It tells you liquidity is changing form. And historically, it signals not the end, but the acceleration phase of precious metals bull markets.
I think people should remain calm. I try to stay even keel. Even on the way up, back in beginning of October, the market went crazy on the way up, especially gold. I try to stay calm and not too excited. And the same thing when it corrected. Same thing now. But for people who want to get involved in silver, I would say don't go in all at once. I don't, if you have a certain amount of dollars, don't go and buy all of it in silver. Maybe dollar cost average, and don't worry about the price, because if you do it regularly, you're going to get a period when the price is corrected down. So yeah, I think that's the best thing to do. But it's getting I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, because the dealers, when it's very volatile, they need to have a wider bid and offer spread to protect their profitability. So that's the only thing I would say right now. I heard that from Andy Scheckman last week. I interviewed him. He said the constitutional or junk silver is, it's almost trading at spot, which is unusual. I'm not really picky. I just try to get the best deal in silver. And I think as long as you have silver, that's fine. I think everything will do well. Here in the UK, I like buying the coins of the realm, like the 1 ounce silver Britannias, and I have some like pre-1920 sterling silver coins as well. Those are they're like the junk silver for the UK. And in the US, I would stick to silver eagles and pre-65 coinage. And I guess if you have millions, of course, you might want to think about bars, silver bars, like 5,000 ounce bars and stuff like that. But for the small investors, stick to the coins and maybe some 100-gram bars and stuff like that. I mean, it's very surprising for me, and but I think maybe these central banks are waking up to the fact that yes, it's good to have gold as more of a reserve asset, but silver will provide more liquidity as well in terms of a day-to-day asset or money or currency to use for the general public. And I see that. I think it's Ronan Manley and Bullion Star. I'm not sure if it's together with Bullion Star. They're helping develop this token in Dubai, silver-backed token. So I'm not sure exactly yet what that's going to be like. But you could go to Dubai and use silver as currency.
What gives me even more confidence in this silver bull market is the behavior of governments and institutions that traditionally ignored silver for decades. When Dubai unveiled that enormous 1,971 kilogram silver bar, nearly 2 metric tons, it wasn't a publicity stunt. It was a signal. It told the world, we are not depending on Western financial architecture anymore. We are building our own metals-backed infrastructure. And if that infrastructure includes silver, then silver is money again. Simple. People sometimes forget the linguistic evidence of this. In French, argent means silver and money. In Spanish, plata means silver and money. In many cultures, silver has always been money. We in the West have only been disconnected from silver for 50 or 60 years. That is nothing in the scope of monetary history. We didn't evolve away from silver. We were pushed away from it, And now, quietly, the rest of the world is edging back. And this is happening at the same time that Western monetary systems are becoming increasingly unstable. You can see it in the debt markets, the banking system, the repo plumbing, the fragility beneath the surface. There are warning signs everywhere. But what's interesting is that the public doesn't see it yet. The public still believes in the safety of digital currency systems, the permanence of the existing financial order, the idea that central banks are in control. And they may be calm now, but calm is not the same as stable. Calm can be the quiet before the monetary storm. And this is where silver's role becomes extremely important. Silver is not just a hedge against currency failure, it is a bridge into a post-fiat system. Gold plays the ultimate monetary anchor role, and it always will. But silver plays the liquidity role. Silver circulates, silver moves. Silver is what ordinary people use when the system resets, because gold is too valuable for everyday transactions in the initial phases of monetary rebuilding. That's why I keep saying, even if gold goes to $10,000 or $15,000 per ounce, silver is the one that allows economic life to continue during transition periods. It's odd that the West, with its university economic departments and highly paid analysts, is the last place to understand this. Meanwhile, India, Turkey, the Middle East, and Southeast Asia already get it. They understand silver instinctively because their cultures remember it. In many of these places, grandparents still carried silver coins. They still think in silver terms. And now their central banks are responding to that cultural memory. Look at India. They are now allowing silver to be used as collateral for loans. That's huge. That means silver is becoming functional money again, not just an investment. That also means demand is going to rise further, because when an asset can be collateralized, its utility increases massively. In the West, we treat silver as an industrial commodity with an investment subset. In India, they're turning it back into a monetary instrument. Look at Dubai. They're building a tokenized silver network. If that becomes widespread, you could be tapping your phone in a shop but paying in silver. Not a silver ETF, not a derivative, but actual vaulted silver represented digitally. That brings a kind of liquidity we haven't seen for silver in over a century. And it's ironic, because the West thought crypto would create sound money. But it may be silver that benefits most from the technological layer that crypto inspired. Look at Turkey, Russia, and the Gulf states. They're adding silver to reserves for the first time in modern history, and people in the West haven't even noticed. They're too distracted watching stocks like Nvidia or scanning Bitcoin charts for patterns. Meanwhile, silver is quietly re-entering the monetary bloodstream of the world. And that brings us to price. When silver broke above $50 again, most people in the mainstream financial press shrugged. They called it speculation. They called it volatility. They did not call it what it is, a structural repricing. They also didn't acknowledge that silver above $50 is not a bubble. It's simply matching its inflation-adjusted price from 1980. Silver at $50 today is not expensive. It is historically cheap. If silver were truly reflecting modern monetary conditions, industrial shortages, sovereign demand, and paper market weakness, it would already be above $100. But this is how major bull markets operate. They always look too expensive in the early phases and too obvious in hindsight. People say, isn't silver too risky? And I always say, compared to what? Bonds, which are guaranteed to lose purchasing power? Bank deposits, which depend on systems that can freeze liquidity overnight? Cryptos, which can lose 50% in a weekend because a leveraged trader sneezed? No, silver is not risky. Ignoring silver is risky. And now we're entering a stage where the supply side will begin to strain. Primary silver mines are not increasing production. If anything, they're declining. Secondary production, silver as a byproduct from copper, lead, zinc, and gold mining, is also not expanding dramatically. Even if price rises, you cannot magically create new silver. New mines take 7 to 10 years to develop, if you're lucky, and many of the world's biggest silver-producing regions are politically unstable or environmentally constrained. So supply is not flexible, but demand is. Investors will soon be competing with governments, and both will be competing with industrial users. That's when the price begins to move in large leaps rather than small steps. That's when you start seeing the $3, $4, $5 daily moves that shock people, and that's when the mainstream suddenly awakens. We are not there yet, but we are moving in that direction quickly. And while some analysts in the West still think silver is just an industrial metal, the East is already preparing for a world where the monetary system must be anchored by physical assets. The BRICS countries are building clearing mechanisms that bypass the dollar. Oil contracts are being settled in alternative currencies or through metals-linked systems. The global South is diversifying reserves, and in each of these shifts, silver plays a role, even if silently. The irony is that a lot of Western investors will only understand what's happening after the move is complete. They'll chase the price at $80, $100, $120. That's how bull markets always play out. The early adopters are calm and quiet. The middle adopters are cautious. The late adopters rush in loudly and emotionally. And then they blame the market for volatility. So whenever viewers ask me if they should buy silver now, I always give the same calm advice. Don't buy all at once. Dollar cost average. Keep your emotions steady. Don't worry about whether silver went up $1 today or down $70 tomorrow. Those things will not matter when silver is at $100 or $150 in a few years. What matters is having exposure before the public stampede begins. And remember, premiums will rise. Dealers must widen spreads during volatility. That's normal. It's not manipulation, it's risk management, and it's another sign of structural tightness.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.